It's a view from the floor here at the New York Stock Exchange. I am joined by Jordan Waxman of Nucleus Advisors. He is the founder and managing partner, and it's great to see you. And let's get right to it because consumer prices rose 3.8% annually in April, the highest since May of 2023. This just came out. How should investors perceive this?
Well, oil and gas prices are definitely influenced by what's going on in the Middle East. You've got high oil and gas prices are going to crimp people at the gas pump, and it should hurt the average investor to have that kind of inflation. Luckily, the food prices were a little bit more muted now, so I guess the price to have a hamburger and French fries, waiting for your car to gas up is not quite as high. But it's alarming. I mean, this is something that hopefully is temporary and filters through the market, but it also tells you should probably be owning some energy and something that's exposed to that in your portfolios.
Also alarming is what's happening in the Middle East right now. How should investors be influenced when they make their investment decisions, seeing what's going on?
War and trouble, it's never good for the market. Uncertainty is what the market fears, and I think what we're seeing in the Middle East is diplomacy and then the strong arm, and so it seems like there's no real clear path through the war. It's just there's no way around it anyway. We're just gonna have to go through it. I think it's going to last for a long time, and people should settle in and strap in for a little bit more volatility.
Generally speaking, what are your thoughts on asset allocation perspective?
Well, I don't think everybody when I was growing up in the business had an exposure to commodities, for example, or anything that was sort of it hurt when you drop it on your foot, that kind of thing. So nowadays you have to own some commodities, something that's exposed to whether it's oil and gas or precious metals or Bitcoin or something like that to have ballast in the portfolio. We still are looking for opportunities in alternatives, whether that's venture capital, cryptocurrency venture capital, technology venture capital, things that are exposed to artificial intelligence, private equity, even private credit selectively, because I think that's under a rock right now, and there are opportunities to get between 12 and 20% yields on private credit. And then stocks are still reasonably priced if you think that corporate profit growth is accelerating. So we still have a moderate exposure to stocks. And now that the bond market is backed up, we can get some real yield in the fixed income portfolio.
There are some recent tax and estate law changes. How do you advise clients when it comes to this topic?
That's a great question. A couple can exclude $30 million of assets from their estate today. And that's a huge savings. And so we're looking for ways to either give the money to next generation or future generations, or put it in spousal limited access or lifetime access trusts, discounting mechanisms to get more assets out of the estate. In addition, there's some tax rules that allow investors to expense fully capital expenditures in the first year, whether it's a car or a plane or a boat or equipment that they're using, or more compute power for their AI. So there are plenty of ways to look at that. In addition, the use of life insurance and assets within life insurance policies for generational wealth planning has been we've never seen as much demand.
Jordan, thank you so much for your insight and joining us.
Thank you. It's nice to see you again.
Thank you. And that'll do it for us here on Asset TV at the New York Stock Exchange. I'm Michelle Yu. We'll see you next time.